We are taking a look at the Market System Analyzer today. It's a portfolio analyzer. You can export your TradeStation XML files and use this Market System Analyzer. You can Google Market System Analyzer and get this. They have a free 30-day trial. It's another way to do portfolio analysis. I have my portfolio calculator and I use multi-charts frequently, and this is just another way to do it. And so you can see the equity curve here, and we can take a look at some of the performance summaries. You go view and I guess performance results. Let's see, I pulled that in over here in another window. So here it is. We can look at the summary. You see $551,000. I'm using a different set of slippage and commission numbers. Here are the numbers. Instead of using a flat $25 round turn slippage and commission for each, I'm using this setup: 25 for the E-mini S&P, 30 for euro currency, 40 for gold, 35 for soybeans, and 35 for crude oil. That's round turn for slippage and commission. Those are the numbers that are being used and deducted from each strategy for this performance report combined. And you see the long and short and total. We'll go over the main numbers very quickly. The total net profit is $551,000. You see the equity curve in the background. These are day trade strategies, and so you have to take that into consideration. Some of these factors, such as average trade profit. The average trade profit is $79.96, and that's inclusive of all those slippage and commission numbers. $89.74 for long, $70.09 for short. So the long side does better overall. And let's see, the drawdown, the worst case drawdown is $91.75, and so $59.77.50 on the long side and $96.53.75 on the short side. So overall, the long side has a lower drawdown and higher average trade profit. So something to consider would be long only trades, and so that's something that could also be done. This is the portfolio. We are going back. What is the distance on this? Let me see how I set this up. It goes back, I go back to 1997 on some of these reports, and so in all realities there's not a complete equity stream for most of our strategies in the original portfolio until 2008, and then we have 3 of the strategies that don't start until 2004-2015 time frame, and I will talk about those next when we take a look at the charts. So we're looking at the charts here. These are the main 5 systems that were originally in our 25K portfolio, and we added 5 more strategies to this to really soup it up, you could say. And today you see the one trade on these main 5 strategies is the Cobra 3. Really nice sell-off, looked weak at the open, and it followed through. Nice range, one of the better trading ranges we've seen in a while, and Cobra 3 captured this move on the 15-minute chart. All the other strategies are flat. You see a soybeans day trader 3 strategy yesterday. Now let's look at the additional 5 strategies that have been added. The additional 5 strategies, the first one includes Tick Pulse. Tick Pulse also had a short trade today, and then it quickly got back in. Lots of red on the indicator, and counter trend bounce right here. You know, the market has been stuck at the 21.25 area, seems to have liked that number, and now we've broken through. It just kind of quickly sold off and even got as low as 20.91. We came within half a point. I hate it when that happens. It came within half a point, or actually a point of the profit target. So then it rallied back, and so that's just part of trading though, and it happens. And so still net profitable on this day so far, even if this goes all the way back up and gets stopped out. Taking a look, the market selling off today. They say the election, but I think it's the Fed FOMC meeting is tomorrow, and so a lot of times it pulls back for the FOMC meeting, and I guess the election on top of that as well exacerbates the sell-off potentially. Gap fill and reverse crude oil had a losing trade today. This has been a hot system, and here's a losing trade, and once again it got stopped out at the lows, and once again something that you hate to see as a trader when you watch this stuff. is it gets stopped out and then rallies right here all the way back to almost where you started. And so that happens. Let's see, gap fill, reverse. Now this is from our book. These last two strategies I talked about, gap fill and reverse, are from the book. Good counter trend strategy. It has a choppy equity curve, but I like the combination because it's so different than everything else. It's so counter trend in nature compared to everything else we have that it makes for a good system to combine. So gap fill, fade, E-mini S&P, gap fill, fade, crude, or gap fill and reverse are the other names of these strategies. These are in the book Algorithmic Trading Systems. Also tick pulse, I only have data going back to around 2014, let me see, or actually September 1st, 2015. This is with $25 slippage and commission. 9/1/2015 is the first trade on here. This is with $25 round turn slippage and commission. So you see the choppier equity curve without then if we had no slippage or commission. And so this one starts, I only have data to 9/1/2015 on this. And then we look at the crude oil after hours and as well as crude oil inventories. Now I've revealed the code for these on YouTube. So these are actually kind of free because they're in YouTube, and these two are in the book. The gap fill fades are in the book, so you can get those. So you can get these 4 strategies pretty much on YouTube or from my book. And so you see it's a choppy equity curve and very cyclical, and we talked about how this equity curve pulled back, and this is good timing when it was $1,500 off this equity curve to try to catch the next move, because there was a $5,000 run there, pulled back, $5,000 run there, pull back. Will there be a $5,000 run here? We'll see. We don't know. It could come back in here. It could come back into the trend line again of this equity curve, or it could stop working. And so it's a very, this one is one that goes back only to January of 2014. That's when we noticed this pattern started working. It's a very, very simple pattern, and like I said, I reveal it in my YouTube video, one of them. And so crude oil weekly inventory is another strategy that we reveal in our videos, an emerging pattern. Looked for a counter trend strategy around the inventories reports to fade the spikes, and found out that since March, the inventories report creates a nice trend, and you can see it here. And so let's see, these crude oil reports include the slippage and commission as well. All these reports include the slippage and commission. So you see the equity curve, and this one goes back to 3/22/2015. And so for crude oil weekly inventories, crude oil after hours, and tick pulse, the equity curves don't go all the way back like these other strategies. For tick pulse, it's because I don't have the data, and for these other two, it's because they're emerging trends. And so, like I said, these 4 are almost free strategies because these 2 are on YouTube, and this is in my book. And even on this page, the gap continued to be is from my 7 trading systems book. And so the others are proprietary: Cobra 3, SR Counter Trend Gold, Cobra Euro, Soybeans Day Trade 3, Tick Pulse are the ones that are more proprietary. And so I've gone ahead and I'm updating the portfolios. I updated the 25K portfolio last week and had a special offer to include these additional 5 strategies, and I'm going to be adding these additional 5 strategies to the 50K and 100K portfolio, and I'll have results for those soon. And below this video, you can download all the reports, the MHTs, the XMLs, and the daily P&L text files. And you can let me know if you have any questions on this. I want to give you a full explanation. Also, this is the research platform. When some markets are delayed data, as you can see, as in a research platform, we're just doing the research in it.